Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Big week ahead. I mean, so much going on. Corporate issuance hitting the tape this morning. We've got Treasury issuance in conjunction with that. Rates have been a little bit softer. A lot of congestion here, I think, in general. As long as we stay inside of 430 in 10-year yields, I think we're okay. If we start to breach that level, we could be in for a broader move higher, not much higher. We have certainly favored curve steepening, and that's worked out well. If you look at this week ahead, there's a lot of data. You've got NEC Chair Hassett coming out saying the employment numbers are going to be on the weaker side, and we have written to our clients about that over the last couple of months. That these employment numbers are definitely on the weaker side. We don't think it stays that way. We think the economy in general is in good shape. But for this week, we get retail sales, we get the employment number midweek, and then after that we get CPI. So delayed data with the partial shutdown again, and that's been part of the story here for the last couple of months in terms of what this data means, where the economy's at. But in general, we think the economy is in pretty good shape. We think we're in for a good year ahead. A lot of work that was put in 2025, we think comes to fruition in 2026. And the reality is we're in early stages of 2026, but we think it's going to be a good year. With regard to markets in general, you look at the move on Friday. Look, volatility has been on the lower side across the spectrum of asset classes, with the exception of foreign exchange. But even if you look at rates right here, you look at rate volatility, you look at credit volatility, spreads are still very, very tight. You look at the VIX, still very, very low, relatively speaking. But there's going to be some chop involved here, and that's what we saw in 2025. If you look at April, that was an inflection point in our view. We don't think we're going to have one of those again, but this is not going to be a straight line. But in general, we think markets will be okay along with the economy in 2026. Wishing everyone a great week ahead. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.